Hey, what's happening, guys? Dan Darrow here from Options and Play. So, as we get into earnings season and we get more earnings trades going, more things moving around, just there's all sorts of moving parts, right? Obviously, the numbers are going to matter, the reaction is going to matter, the price to move is going to matter, what your option strategy is going to matter, but also what the overall market's doing is going to matter too, right? I mean, there's a lot of elements that go into an earnings trade, like the entrance, the exits, right? And the overall market is definitely going to have an impact on that. Okay, so coming into the week, I definitely thought 3M was an interesting setup. It had a pretty nice look to it. It was kind of consolidating right at the top of several month range, right? You know, I talked about this where it seemed like the options could have been a little bit underpriced. Like if it broke out, there was room into like the 190s. If it was weak again and it broke down, there was room into the 160s. So based off what it was pricing in and what the potential was off the chart, it seemed like the options were a little bit underpriced, right? So what happened was this morning they had a weaker number. They missed on EPS, missed on revenues, stock gap down, and it was pricing in about, I believe it was about like, I think it went out yesterday like a little bit like around like 7.5. The options came in a bit. So it was pricing in 7.5, and when I wrote up the trade idea, I was looking for a move of basically 10 points in either direction. All right, so um, what you saw today was it gapped down, right, and stock. Let me go to the minute chart here. So I'll go to 15-minute chart. So it gapped down and it just kind of sat right around like the 8 to 8.5 point range, right? It closed at like 175.50, 176, and it gapped down. It was hanging around 170, 167, 167.50 in that ballpark. So it's right around 8.5. Now, normally, you know, if it was like a volatile tape and we were down, you know, if this was yesterday and the S&P was down like 2%, 1.5, 2%, it's a different story, right? Because things are weak, things are getting hit. But today, the spiders gapped up, right? And they were grinding, 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 and it looked like they were going to do another one of their gap and goes, which we've seen happen so many times in the past, right? So it's the market was recovering, right? A lot of stocks were rebounding off of getting hit yesterday, and 3M was basically within like $1.50 of the target of the strategy, right? It was down about 8.5. We were looking for 10, but the market was rallying, right? So if it was a weekday, right, things were getting hit, then maybe you want to hold out, maybe really be specific and wait for like those 10 plus points on the downside, right? But in a strong tape, when a lot of things are rebounding, and this is at like 8.5, it's close to that target, but not quite there. Well, then like that's a scenario where I would say like you probably want to be a little bit quicker on the exit, right? Because things are rebounding, things are reversing, and going against the grain a bit in the sense that this is trying to get hit on a day when everything seems to be rebounding or rallying, right? So um, again, you know, when it comes to these earnings trades, there's a lot of pieces that go into the puzzle, and one of them obviously is what the overall market's doing. So you really need to kind of like gauge the feel for the market, gauge like the strength of the tape that day, right, or the strength of the weakness, and how that's going to impact your trade, right? So you know, if it was bullish, then maybe you want to be a little bit more patient and see if like you know if the market's rebounding and rallying and the trade's up and it's moving in your favor, then maybe you want to be a little bit more patient because maybe it'll continue to build. But in 3M's case, it was going opposite the grain, and you know, rising tide could lift this. It basically it hasn't really lifted it, but it's kind of prevented it from kind of really getting hit harder. So you know, it's just something I wanted to point out because again, as we get into earnings and I mean the volatility is picking up a bit. But we're getting like these big 1% up days, 1% down days, and it's going to impact the earnings trade. So just wanted to kind of like highlight it, remind you, just kind of like point out what I'm looking at, like you know if I'm earlier on an exit or later on an exit, this is definitely something that impacts that. All right. So questions or comments, love to hear from you. And if you like these videos and you're looking for more information on options education or more options trade ideas, please follow up with the link in the description of the video for more information on options to play. All right. Hope you guys have a great night, and I will talk to you